Hi, Madam Neka. Good morning. Thank you for joining the live section. Okay, it's 8 o'clock. Prolific group, thank you for joining. So let's just give it to 8:05 so that others can join and then we kickstart. Hello Afam, thanks for joining. How was your night? How are you doing? So we're trying to wait for others to join, kickstart by 8:05. So I'll just try to take a quick recap while we wait for others to join. So yesterday we were talking about how to build wealth through real estate investment, even as a first-time investor, and we looked at what real estate is, which we define as land, anything above it and anything underneath it, all inclusive is real estate. And then also saw I gave like a breakdown of what we'll be doing at the course of this 30 days journey, which is first to help you understand real estate and how to make the best of real estate investment. So today we'll be looking quickly at some key benefits of real estate investment, how you can actually build wealth, the different ways you can build wealth through real estate investment. And then we'll also be looking at different types of real estate. We're looking at different aspects of real estate. A lot of us are conversant with residential real estate, so we'll be seeing different other types of real estate and how you as an investor can benefit from investing in those aspects of real estate. So while we're still waiting for others to join, please do well to share the link, invite more people to join us as we learn together. I want to confirm that you guys can hear me clearly, loud and clear. Please do let me know in the comment section if you can hear me clearly. Okay, so it's 8:05 already. So let's get started with the business of today. So like I said earlier, we're looking at why real estate, how can we build wealth through real estate investment. And I was first like I given an earlier definition of real estate. I want to start with the first reading I have here on my book, Wealth Creation. For wealth creation is multiple streams of income. So number one is multiple streams of income, how you can build wealth through real estate investment. Now, real estate gives you the opportunity, to generate income from different, aspects. That there's different ways you can generate income from real estate. And number one way you can generate income from real estate is through rental income. That is in a situation where you buy a house, you build a house, you rent it out, you have tenants in those houses, and then they pay you rent, you earn money. They pay rent, you earn money. So through rental income, that you are having a house or a shop or a warehouse, it's not just houses that you can rent out. There's a lot of things. You can even have a hotel, give it out on lease. You can build a school, give it out on lease. You can build a recreational center, give it out on lease, and then you get rental income. People that rent these places pay you, and then you make money passively. And another way that you can grow your wealth through real estate investment is real estate appreciation. So at the course of these 30 days, we'll be looking at off plan. Off plan is one of the easiest way to multiply your money when it comes to real estate investment. Off plan gives you the opportunity to acquire a property at a template or prototype state, usually because it's at a very basic state. The prices are usually very low. They give you the best of offer at that time because the developers are looking for money to develop their project, so they give you the best offers at that time. But within 6 months, sometimes within 3 months, once the off-plan sales is off, once they've started the project, they've gotten to a certain level in that particular project, the prices begin to change. And for you who have invested at an off-plan state at the very early state, you're already making your income, the ROI is increasing. Say for instance, you can, at a basic state, at the prototype state, you can be buying that property for 15 million. But when that property is standing, or even at the cost of the building, before the property is fully finished, the price must have gotten to, let's say, 70, 80, 90 million. And that gives you good return for your investment. And usually this span between a period of 0 to 12 or 18 months, because the delivery period for most off-plan projects are usually 12 to 18 months. So within that 12 to 18 months, you've gotten good return for your investment. And then you can also look at land banking. That's talking about appreciation, real estate appreciation. Looking at land banking. Land banking gives you the opportunity to buy a property, a land, hold it for a long period of time, and then eventually resell it at a higher price. So that's one of the ways to can build wealth through real estate investment. And then another one we'll be looking at the benefits, is tangible assets. Unlike the shares, the bonds, real estate is tangible assets. It does not the market fluctuation, the change in the influence of exchange rates, change in exchange rate, dollar falling, dollar rising, and naira falling, dollar rising, does not really affect real estate as much. Just hold on a minute. Sorry, my light went off. It doesn't really affect real estate as much as more oftentimes when there's inflation, it affects it positively affects the price, your property, the price of your property, or the value of your property. When there's an inflation, when the cost of building is high, when the cost of building is high, cost of equipment, and other things are going up, the value of your property keep increasing even with inflations and all that. And that brings me to the third point here. I said inflation protection. When you have a property, it protects you against inflation because you are not running at loss. It causes the value of that property to increase. Most times because of inflation, like there was a time when a bag of cement was around 10,000, 11,000, 12,000. People were not building as much. But definitely people need to live in houses. There are more people coming into wherever location you are, be it Abuja, Lagos, Port Harcourt. People will keep coming. And aside from people coming in, people are increasing in their family size. People are getting married. Someone who is living in a self-contained, if he gets married, might want to live in a 1-bedroom or a 2-bedroom until the demand of housing keep increasing on a daily. So if you already have a real estate, if you already have a property, it increases, it fights that inflation for you, because instead of losing money, you are getting more money for your you're getting more value from your investment. So let's say for instance the value of the property initially was 1 million. You know, with inflation, things have gone up, price has hijacked. You know, you can now start renting that property of 1 million for, let's say, 1.2 million, 1.5 million, because now there's a demand for those houses, and there are no new houses being built because of the inflation, or even the new houses being built also calculates the cost of building, and the price will eventually go up. You know, and then we're looking at long-term wealth acquisition. That's the fourth point, long-term wealth acquisition. So real estate helps you to accumulate wealth for a very long time, and that's why you see that most times when people write their will, they usually would write will their house, their estate here, their estate there, you know, even to their children and their children's children oftentimes, you know. So it helps you to keep wealth for a very long time. And let's say, for instance, you're doing land banking. You know, land banking, it's a very easy way, you know, to accumulate wealth. You can buy a property in the bush, you know, just leave that property there for a very long time, and eventually one day there will be a need for that property, and then when you sell it, you know, you make good money. There's this video that has made a round where a lady bought a plot of land for 150,000 and eventually sold it for 18 million. And I can tell you for free that I have also experienced that. This property my mom bought for about 80,000 or one, I think it was within 180 to 120,000. She bought that property. That was far back 2008. You know, she acquired that property, and in 2020 we sold half of that property for 650,000, and the remaining half of that property right now is going for 3 million. Someone is pleading with her, let me give you 3 million for this property, and she's saying, no, I'm not ready to sell yet. You know, so that is how you can actually build wealth. As at that time, 120 might be a lot of money, but not so much. You know, the 120 was not too much money compared to the 3 million that they are offering her today for that property. And that is because the place is still not developed, like it's still a village kind of setting. Assuming that place is more like a city center, you know, it's the value of that property must have gone way higher than that. And those are some of the things I'll also be considering, how to spot a very good property to invest in, so that you can be sure of higher returns within a short period of time. You know, so we're also looking at diversification and stability. You know, real estate helps you to diversify your investment portfolio. You know, you have assets, tangible assets. Most times these tangible assets are what you use when you want to acquire loans from the bank, you want to acquire loans, or even when you want to use them for someone who sees that you have real estate, you know, will trust you enough sometimes to release certain kind of funds to you, or certain kind of goods to you, because they know that, okay, you won't run away. It's fixed, you know, you won't run away with that property. Eventually they would find a way to recoup their money. That's if you try to be kind of fraudulent. So it's kind of increases your wealth, your worth, you know, it kind of increases your value. People see you as more responsible. You know, people kind of place a certain kind of value on you when they know that you own real estate. And then it also helps you to be stable. Let's in a situation whereby the economy is trying to hijack your business or make your business shiver, you know, you can just sell off one of your property or your assets and then use the money to, you know, put it in your business, and it helps that stability, you know, it keeps you going and all that, you know. So that's about, I don't know if you guys can hear me. Please, I did like some reactions on the comment section. If you're understanding what I am saying, please, I did like to get some reactions from the comment section. Are all these people here? Okay, so I would continue. So we're now diving into understanding different aspects of real estate investment. Okay, thank you, Afam. So we're understanding different types of real estate investment. So like I said earlier, the most popular of them all is residential real estate. That's what most people are conversant with. And what is residential real estate? Residential real estate can be that self-run, 1 bedroom, 2 bedroom, duplex, terrace, bungalow, townhouse, terraces, that people live in them. That is residential real estate. It can also be used for maybe hotel, Airbnb, shortlets, and all that. Those are residential real estate. People live in them. So that's residential real estate. Now, what are the benefits of residential real estate? Residential real estate gives you steady inflow. Steady inflow in the sense that you always you get rental income. When you rent it out, you lease it out, the occupants pay you, your tenants pay you, and then you get some good money from that. But then residential real estate has its own shortcomings, has its challenges, because maintenance costs is high when it comes to real estate, when it comes to residential real estate, because people are living in that property, and then sometimes it becomes more expensive to maintain it, especially when you don't have tenants that are very good with maintaining property. And then also dealing with tenants, like if you're the one handling your property, sometimes it can be very, very tedious, dealing with your tenants. So it's sometimes advisable that you just give that out to a legal company, like there are some law firms that do help people manage their property, and then there are some individuals like us that also help people manage their property. That way, the stress of you having to be there for all their meetings, having to keep them organized, it's taken off you. You can just delegate that responsibility, and then you sit back and receive your rent when it is due. So you just try to kind of keep a system in order that also takes that stress off you. But aside from that, residential real estate is very, very good, because there is high demand of residential real estate on a daily basis. People are looking for houses. People are looking to increase their house. Let's say for someone who is staying in a self-contained, wants to expand to a 1 bedroom or a 2 bedroom because his family is growing, or because he's about to get married, and then for someone who is already in a 2 bedroom, might want to go for a duplex. They want to expand their living area, so that they are more comfortable, they are more balanced, they are more relaxed in the house. So that's for residential real estate. And then the next one we'll be looking at is commercial real estate. Commercial real estate is where you do commercial activities, like the school, schools, banks, recreational centers, even hotels. Hotels can pass for residential, for commercial real estate, hotels, and a whole lot of other things that has to do with business. Your shopping malls, shopping plazas, they are all under commercial real estate, because these are places where business transactions, take place. Now, the advantage of commercial real estate is that it gives you higher returns. Let's say, for instance, an event center. An event center, you see some event centers that per day hiring, you're paying sometimes close to $1 million, sometimes 500,000, $500,000, sometimes 600,000. You get bulk money. So the return on commercial real estate is high. Even office spaces, they are usually more expensive than an office space that is just, say for instance, 1 bedroom. For instance, 1 bedroom is more expensive than a residential house for 1 bedroom. So commercial real estate actually gives you more return on investment. But the disadvantage of it is sometimes the economy affects commercial real estate. For instance, during the COVID-19, a lot of companies had to work from home, and working from home means that the owners of their office spaces wouldn't get rent. So the economy of the country, the economy of the state, oftentimes affects commercial real estate as to residential real estate. And commercial real estate are usually it involves a lot of money. unlike the residential real estate that may require maybe little funds as compared to it's usually like the basic entry point. The residential real estate is like the basic entry point for most investors because it costs less than the residential than the commercial real estate, which it's like, say for instance, now you want to build a plaza, it takes a lot of money to build a plaza, but it's now different when you're building maybe a 1-bedroom or a 2-bedroom. That costs less. But fortunately, there are also opportunities where you can actually do commercial real estate even when you don't have to break the bank, you don't have a lot of money. You can co-own a plaza, co-own a plaza in the sense that sometimes we have plazas for sale. You can buy 1 or 2 shops from that plaza, and then you own a plaza, you own a commercial real estate. So you mustn't be the owner of the entire plaza, but you can own a few shops in that plaza, and then you get to good return on your investment. So that's about commercial real estate. And then the next we'll be looking at is industrial real estate. So the next point you have is industrial real estate, and this has to do with places where constructions are done, productions are done, factories, warehouses. Those are industrial real estate. And in Abuja here, I think we have Idu as our industrial layout, although there are a lot of other companies that have their industrial sites outside Idu. But like within Abuja, we know that Idu is the industrial layout. That's where you see most of the warehouses, most of the production plants and all that within Idu. But aside from Idu, other places they also have such stuff like that. So industrial real estate is very, very good. It's very recreational. It's very it gives you good returns because most times it usually leads to let's say for instance you own a warehouse. The people that are coming to lease that warehouse, you might have an agreement with them for 10 years, for 5 years. Oftentimes lease or rent in those places are usually more than 1 year, so it helps you raise bulk money. It can help to get bulk money. You get bulk money at once, and then you can use that money to invest in other projects. But one of the disadvantage of industrial real estate is the fact that it is specific. Most times it's difficult to now change the use. It's specific. Let's say for instance you're building a warehouse. This is just a warehouse. It's difficult to change it into something else in the future when you want to switch. It costs you more switching it, unlike residential real estate that sometimes can be used for office spaces, sometimes can be used as short-let apartments. But for industrial real estate, most oftentimes is usually fixed. It has a fixed purpose of use. And another thing also that affects industrial real estate is the economy. Just like commercial real estate, economy of the state also affects residential industrial real estate. But the return from industrial real estate is massive also. The return from industrial real estate is really, really huge. And then you can always get bulk money, bulk returns at a go from industrial real estate, because oftentimes you give it out on a lease, not just rent, on a lease. You are giving it to a particular company for 2 years, 5 years, 10 years, as the case may be. And sometimes this can also help you to recoup the initial investment amount that you have put into acquiring that property, or even putting that property together. So that's about industrial real estate. So I think at this point I want to take questions. I don't know if you have any questions about the different aspects of real estate. Please, if you have a question, I'd like to take that. Okay, so in the absence of none, I think we'll be calling it a close for today, and then we'll meet again tomorrow, where we'll be discussing on more. We'll be looking at land titles tomorrow. we'll be considering land titles tomorrow, so we'll be learning different land titles and what it actually means, tomorrow. So bye for now. Thank you for being here with me. I'll see you guys tomorrow.